You guys made it. So thank you for that. Dedicated. That's right. People that want to get better. We love that. Anyway, my name's Ryan Leake. Rashmi, you can introduce yourself real quick.
Hi guys, I'm Rashmi. Let me come over here.
It doesn't sound like it's on. Is it green? Yeah, you're good.
You would think for someone who's trying to set up a live video stream, I would know how to use tech a little bit better, but here we are. I'm Rashmi, like don't rush me. Thank you so much for coming out, guys. Ryan and I love hosting these events and talking to real estate investors.
There we go. So anyways, this is a short-term rental secrets mastermind / strategic investors meetup. So we do this once a month. We usually have experts in the industry just give us information about what's going on, how we can improve our business, how you can start.
Do you mind if I put this mic? You can just put it on.
This is also a mastermind group that sponsors this event called Short-Term Rental Secrets. If you're interested in that, talk to Rashmi and I. It's a great group of about 400 to 500 active investors and operators in the short-term rental space. This is what we're doing. If you guys don't mind, real quick, we get the phones out and just scan this to register if you haven't already on meetup.com. That's just, we got to make sure we got it looking good.
Got it.
I appreciate it in advance. And there might be a few more barcodes, so don't be shy with the phones today. I'll give everyone a second here. Is that a slide or a register? This is to register on meetup.com. Okay. Yeah. Thank you. All right, we'll move on. What's this? This is me. So my name is Ryan Leake. I own and operate Hostel Casa. So we do short-term rental management here in Austin and Hill Country. So if you're an owner, an investor, and you don't want to manage your own property, that's where we step in. We do all the guest communication, vendor coordination, dynamic pricing, revenue management. Essentially, we try to be A to Z, so you as the owner are hands off, and we take on all the stress of dealing with a short-term rental, which if you own one, you understand what that looks like. Also, I try to give a host tip every month. This one is pretty simple, but if you don't have professional photos, Airbnb just came out with a report saying you can make potentially an extra 40% with professional photos. It's so simple. Depending on the property, it's usually $300 to $700. Get professional photos. It really does make a huge difference. And we're happy to give referrals. We have plenty of that in the space. That's it for me.
Guys, we actually have a photographer here today. If you guys are looking for a short-term rental professional, I like to pitch everyone's businesses as well. Hi guys, my name is Rashmi. Like I said, don't rush me. I started a restaurant in 2014. I still have it. Today we're sponsoring the food. So I hope you guys enjoy. And then in 2020, I got into short-term rentals. We started buying short-term rentals in 2020 to 21. And then the second the interest rates went up, we're like, we're out. And we're like, now what are we gonna do? So we started managing other people's real estate, and we figured that that was also a lot of work. So in 23, I partnered with a friend. Today we manage 50 short-term rentals, and I manage about 50 hotel doors. It's about 5 hotels. And I just bought my first hotel 2 months ago, and we are under renovation right now. I'm hoping to launch it in a couple of months, probably around like October or so. So I guess we should change under contract to Finally Bot. Yeah.
They want to hear Rashmi right, by the way?
Oh.
We're just gonna switch.
Oh, it went to red.
Yeah.
Is this better?
Yeah.
Okay, awesome. Yeah, if you guys can't hear us at any point, just holler at me. I love talking all things real estate, hospitality, anything you guys have questions with. I started with 0 properties. I do have a newsletter where I share a lot about what I do. I have a podcast. I'm trying to produce more content to upload to YouTube just so I can talk to other people like you guys and not be in my house all day doing this. And then if you guys want to follow me on Instagram, I hang out there as well.
Okay. Oh, also, so the mastermind we're a part of, Rashmi and I did pay a good chunk of money to be a part of it, but this is a free resource for you guys that you don't need to pay for. So it's their deal analyzer. So it's an Excel spreadsheet, which essentially shows you how to analyze the short-term rental and just taking down all the potential expenses that go into that. So if you wanted to download that, that's free right here. And if you miss the QR code, just text us and we'll send you this. Oh, wait, just a second. Got that Katie?
I don't know how it works in technology.
Nice job. Okay. So we have some beautiful sponsors today. We'll start with host GPO, Katie. You can come on up here, introduce yourself, explain what it is you guys all do. Yes, very exciting.
I'll trade with you.
Okay, so I guess I have to use this photo.
You don't want to, you don't have to.
I don't
You just
have
gotta yell.
Can you hear me?
Oh yeah.
I'm not quiet. I've never been quiet. Okay, so my little background for short-term rentals. I started in probably 2016 or so. I built a tiny house that I just designed and wanted to do for years, and accidentally learned that it was going to be a successful Airbnb. Took that and ran with it. Fell in love with the industry. I jumped industries into short-term rentals, and I worked for a company where I think I launched 377 apartments while I was with them in 17 cities or so. So really just kind of fell in love with the energy of this entire industry. I then heard about a company called Host GPO, which is who I'm with now. And I was like, wait, what are you guys doing? Are you hiring? And jump ship almost immediately to join. So we are a GPO that is a group purchasing organization. This is pretty much buying power. Our members have over 300,000 units between them. So we're able to approach companies, brands, partnerships, vendors, whatever you want to call it, and say, hey, look at this buying power we have. What kind of discounts can you give us? So we work with all kinds of different partners to give you discounts between about 25 and 75% off usually. Something like furniture, linens, kitchen items, recreation, kind of anything that you would want to put into those four walls. My team, my marketing team, together with 3 months free. So if you scan the code, you get 3 months for free. You'll be approved immediately. You'll have access to all of those different partners that we have. And we also do consultation calls with most of our members to figure out. We've got 52 partners. That's a very overwhelming introduction. So we kind of start with an introduction call to figure out what are your needs right now, how can we best help you. You'll be able to skip that. You will get an email later today asking if you want to do the introduction call. Our team will help guide you to the right partnerships and things like that. But we work with like furniture partners, we work with West Elm, their, you guys are gonna right do all the midnight mattress, kind of like a medium firm type of thing. We've taken away all of the pretty customizations, and it's not branded. It's gonna get covered with a sheet that allows us to knock off over $600. Pretty customized. Maybe that mattress for $100. So. We are a company of hosts. Over 80% of us are actually hosts. We're in a very long period of partnerships. There's, if we don't think it's good for short-term rentals, or if we think they don't have a line that is good for short-term rentals, we'll just cherry pick the things that we would actually want to do. So it's taken out a lot of stuff. What question? It's just too much information. Yeah.
But with the partnership, is that a discount on everything across the board? So you can slave lots, for example, or whatever, but it is everything discounted?
Yeah.
For you guys?
Yeah. Schleg, I know you're and when I mean industry best, I mean every trade, like you can work for the Williams Sonoma. But if you're a host GPO member, you get a better discount than that. That's 30%.
Do you have to buy in bulk or?
Nope, not at all. About 2 or 3 partners have ordered minimum. And a company that's called Gibson, they sell mouse washers and kitchen appliances. So we have other partners as well. So we were really for like the small guy and the partners that have 1,000, 10,000, possibly 50,000, 100,000. Yeah.
You mentioned the tiers, the first tier, you get the same discount with each tier, or is it?
Whether you're entry level or the highest end tier, have the same access. The only difference is how you see it. Kind of how it is.
I think that's good. Thank you. Make sure to scan this. We use this and it's amazing. You make that
I'll
one
pass
quick.
something around if y'all want. It's just a little thing. You can come up here if you can remind me who you are. Otherwise, that's your business.
Cool. Thank you. Round of applause for Katie. Thank you. Okay, you got it.
Hi everyone, I am in both the names. I started off with we're a title company. So who here has used a title company before? Okay, so a good amount of you. What was your experience with them? Was it good, bad?
I had to drive too far and take off like 3/4 of a day of work.
So that is one of our main things. We want to make everything as easy and as smooth and convenient as possible for you. So we curate our service to every client's unique needs. So whether it be workflow, and then another way that we add onto that is free mobile notaries across the state and all 50 states. So if you have investments in multiple states or just here, we can get that covered for you, and we cover residential, commercial, and creative investments. So if you've ever done wholesaling, assignments, novations, kind of the deals that the typical title companies won't take on, we take those on as well. And then we're very big on refinancing. So a lot of short-term rental hosts, use the funds from their previous property to fund the next one. So we're happy to take those on, and it's a $0 escrow fee. And then, like I said, our convenience is one of our main things, and then we have very transparent pricing. So we have a flat fee of $450 per transaction, and then there's only a $65 courier fee for any wiring fees, FedEx, anything like that, and that's split between both sides. But we do have the free mobile notaries on the seller and buyer side. And like I said, we cover 254 counties and all 50 states. My contact information is on that QR code, and have any questions, feel free to reach out. I'll be available, and then I also have networking events. So please stay updated through my Instagram or Facebook. It's all linked in there. And then last and final thing is we do have an app which is linked in that QR code where you can use our fix and flip calculators. You can get quotes for our services. And there's also marketing material on there as well, and that's free of cost as courtesy to you guys. So yeah, does anyone have any questions?
I wasn't able to get the QR code.
It's too small. Okay, I will pass my. Okay, yeah.
Is that better?
Oh, all right. I was wondering.
Let me know if that still doesn't work.
If not, I can pass my phone around.
Everyone got that?
Got it.
Okay, thank you. Round of applause. Thank you, Angelica. So since we have a more intimate group, so Reed Andrews is here with Steadily Insurance, but before we do get into the presentation, I feel like we should probably just go around, introduce yourself, and maybe within 30 seconds say the name of your company, what you do, and what you're looking to get out of this meetup. We can start right here. I think it'd be great to get to know everyone.
Hi everyone. Myself, Isaiah Hinson, and Adriel Garcia. We run a company called Zay Media. It's real estate photography here in Austin, Texas, and the surrounding cities. So we do indoor, outdoor photography, drone footage, 3D virtual tours. You know, the whole works. We're basically a one-stop shop for all media here in the city. So if you're ever in need of anything, you can hit me up at this meeting. I don't want to have the fun around or the QR code right now, but yeah, anything photography related, media, professional headshots. You're just starting out your investing career, you do that as well. And so yeah, that's want to talk more? I'll be around.
I'm the other half of Zay Media. My name is Adriel Garcia. So Zay Media, we are competitive with cost. We're easy to find, easy to work with. We want to be convenient for you guys. You know, a lot of people have like one photographer, one drone guy, and a bunch of different people for different things. So we want to be that, what Isaiah was saying, one-stop shop, be convenient for you guys. And what we're looking to get out of this is expand our network and then just be involved. I feel like that is probably the most important thing in this industry, is stay involved and stay active. Thank you.
My name is Ferdy, and I'm a real estate investor, and just came out to check out short-term investing. Cool.
Everyone, Jacoby, live in the area, use short-term rentals, long-term rentals. Here to meet people, grow the network, and try to continue to expand my own portfolio through meeting other people. So.
Hey, what's up, guys? My name is Robbie. I'm a licensed electrician and home inspector. Just like everybody else, trying to network. I'm into real estate, and I like meeting people. I love helping people. So, if you guys need home inspection or anything, just hit me up.
I'm Sudhanva. I am a project manager by profession and engineer. The only reason I'm here is because of my daughter. Me and my wife are responsible for everything that she does.
Hi, my name is Jenny. I am an aspiring home flipper and earthship builder. So maybe one day, I'm in software sales now. So I literally came to pick up an art piece that I had in the last exhibit here and stumbled upon this. So here we are.
I don't need this small enough group. William Guyette, I work for Rain City Capital. We do everything hard money, 1 to 4 units, fix and flip, buy and hold, even short-term rentals. You need refinances, we can do it. But also the reason why I really came here, I'm really interested in this space. I have a couple rentals, none of them are short-term rentals. So it's trying to figure out what makes sense for each individual property, network with some people, connect with people, figure out how I can provide value to you guys. And that's what I'm really interested in.
Let's get great.
Yeah.
We'll be up here in a second.
It's me again, Katie. Though I just presented on behalf of OSGP, the company I work for, I joined the group because My tiny house was a success. I'd love to repeat the hell out of that. I just bought some property down in Brunswick earlier this year and would love to be able to develop it in a really intentional way.
Hi everyone, my name is Davis. I own a vacation rental cleaning company that started in Chicago 4 years ago. We service about 120 units in Chicago. We just launched in Austin last week with our first year. So my goal here is really just to network and get involved in an awesome community and we're a good fit for everyone.
Front right. Front right.
That's Rashmi's mother.
Oh, okay.
Awesome. Reed will call you up now.
All right.
Your intro.
Okay, that's fine.
What is that?
I don't know. She gave me another mic. Clip on.
All right, just give me the cue and I'll.
All right. Well, I'll just point. Hello. So my name is Reed Andrews. I'm here on behalf of Steadily Insurance. Just a little bit of my history here. I've been in the insurance industry for over 10 years now. I got my start at a little company called Pekin Insurance in Pekin, Illinois. That's where I was born and grew up. After that, I relocated to Austin to work for Hippo. And I started there to build out a commercial lines department for Hippo. Our first few products were a condo association and HOA insurance policy. Unfortunately, Hippo's performance as a public company did not go as great as they intended, and they eventually shut down all their non-core lines of business, which meant me. So I moved over for about a year to Incline P&C, where I worked on the program management side. What does that mean? That means startup insurance programs come to me. They look for reinsurance, and our company determined if we wanted to offer reinsurance to them and kind of evaluated their ability to make a footprint in the market. While I really, really enjoyed that job, I could not pass up the opportunity to come over to Steadily, where I am currently a product manager, working on their rental product. And it's a great company, and we are still in a little bit of a startup mode, but rapidly growing and outpacing our competitors and really making a big footprint in the market. So what I intend to do today is talk a little bit about the rental insurance market, maybe some new coverages that are out there to help keep your short-term rentals properly insured. I know everybody loves talking about insurance. This is our disclaimer. Just to reiterate, nothing I say to you is admissible in court, so don't try to sue me. All right, go ahead. So, what is landlord insurance? Steadily's entire mission statement is to bring a landlord insurance product to the market that is fast, that is efficient, that is adequately priced, and that outpaces some of the offerings of our competitors. Our landlord insurance is gaining popularity with the popularity of short-term rental investment. The issue that some people don't realize is that a typical HO3 policy or a homeowner's policy is intended to only cover owner-occupied dwellings. As some of you probably know, you're going to need a proper landlord policy to ensure your short-term rental exposures. Some of those short-term rental exposures include coverages against legal liabilities. If somebody sues you because of your operations, we got you covered. Protection from water, fire damage, wind, hail, all the standard things that your insurance policy covers your property for, we also do. The problem with a standard policy is that if they find out that you are renting it out, that constitutes a business exposure. And most policies are going to exclude coverage for business-related operations. This is why you need a landlord policy. Financial protection against natural disasters, kind of the same thing. And then protection against tenant injury. Now this one's important because a typical HO3 or property policy will not provide you with any coverage for hosting tenants as part of a business. So if you are sued, again, this is what's going to help you out. This is the type of coverage that's going to be in effect. So compared to traditional insurance, a standard homeowner's insurance policy covers building, personal property, sometimes accessory dwellings or additional private structures. However, it's not going to cover any interest related to the tenant. This is where our policy kicks in. It also covers your business exposure if anything occurs related to the rental operations. So compared to renter's insurance, just backtrack, renter's insurance then is something that a tenant would purchase. This is mainly for long-term rentals. You typically don't see short-term renters purchasing renter's insurance. If you own a property that is in an HOA or a COA and you're renting it out, a lot of times they will require renter's insurance. And the reason for this is that it acts as a buffer in between you and the renter. So a typical landlord should require their renters, especially long-term ones, to purchase renter's insurance. And this acts as a fail-safe or a first responding policy in the event of a claim. So if something happens to your property while the renter is occupying it, their policy is going to respond first. And that takes the liability off of you. That keeps your insurance down so that you don't have to file a claim on your own policy. All in all, you can't stress this enough. In your lease agreements, require your renters to have renter insurance.
Next.
Yeah, go ahead. So some various landlord insurance coverages that we offer here at Steadily. We do provide fire. Fire's the big one, right? That's the one that most typically results in a total loss or a total rebuild of your home. The most common claim, however, is water damage. So water damage is something that is the biggest attritional loss leader in the insurance industry. Attritional losses are losses that are smaller in amount but build up over time. So about 30 to 40% of all losses incurred on property insurance is going to be water-based. Those fire losses, while they're very large, usually in claim payout, are very much less frequent. So water damage is the thing that we're looking out for most of all, and that's what we want to provide you guys with, because in the end, that's what the typical landlord is most likely to encounter. Wind and hail, this is another big one. Wind and hail is becoming a huge deal in the industry right now. You probably read about states like Florida and how hard it is to get insurance. This is because of the increase in severity and frequency of windstorms, of hurricanes, of tropical storms. And then also throughout the Midwest, we are seeing a huge increase in hail damage. These type of storms come through, almost always result in a roof or siding replacement. And a lot of carriers are tightening up on their guidelines related to wind and hail. Some states altogether, it's almost impossible to get wind and hail coverage. Steadily right now, while we don't have it in the market, is working on a product for wind excluded coverage. So we will cover everything but wind and hail, and then you can go purchase wind insurance through the state pool. While that's not necessarily convenient, in some cases, it allows us to offer insurance where nobody else can. So it's either kind of like no coverage or we exclude wind and you get it from the state. Better than nothing, right? At the end of the day. We also cover vandalism, theft, malicious mischief, injury, and then there's a variety of other coverages that we include. For instance, bed bug reimbursement. If your rental property is overrun with bed bugs, we will actually provide coverage to remediate that and replace any property that is damaged by it. That's just one example. I'll go through later some additional coverages that we offer. So wildfire is typically covered under the basic fire peril. However, when you go to get a quote with Steadily, we are going to access various data sources, and those are going to pull in wildfire data. And in many cases, particularly if your property is located near a wildfire zone, returns a high wildfire score, you're going to be denied a quote. This happens a lot in particularly California and Arizona. We currently are building out a product to improve our footprint in the areas where wildfire is more prevalent. This is called a DIC policy. This means difference in conditions. To explain it very simply, we cover everything but wildfire. That's an oversimplification. But just like the X-Wind product, you can purchase in California a wildfire-specific product through the California FAIR Plan, which was developed quite recently over the last few years. And if you purchase the wildfire through the wind pool, we will insure everything but wildfire. Again, this allows us to write in areas of California where nobody else can because the wildfire exposure is too high. There are several different types of policies a landlord can purchase. Most of them differ by the perils that they cover. And a peril is essentially an event that occurs that triggers the insurance policy to respond with a claim payment. One of the types of policies you can have is called a DP, or a dwelling fire policy. And there are two types. The first one is a DP1. A DP1 is basically a stripped down version of the dwelling fire product. It covers fire, it covers some wind, hail, but it doesn't have all the bells and whistles on it. So you're not going to get that equipment breakdown coverage or earthquake or anything like that. It's very, very simplified. Typically, if you have an older property, maybe you're less concerned, maybe it is built in the early 1900s, it's hard to find insurance for. If you do find insurance, those early 1900 properties, probably going to be pretty expensive policy. One of your options here is to do a DP1, which is, again, a slimmed down version. You could typically get a lower premium on those. Some carriers that don't allow you to write a DP3, for instance, would allow you to write a DP1. And that, again, is a way to get your insurance costs down. They typically have higher deductibles. They're typically going to cover roof on an actual cash value basis, which means they're not going to pay for the full roof replacement. They're just going to give you the roof value minus depreciation. So a property with an older roof, for example, probably get a better rate if you place it on a DP1 policy. A DP3 policy is the most comprehensive dwelling fire policy you can get. This covers everything unless it's explicitly excluded in the exclusion form. So what you're going to need to do is, I know we say this all the time working on the carrier side of insurance, but you're going to have to read the policy. So many people do not read their insurance policy. For a dwelling fire 3, this is going to include every single coverage except for what's listed in the policy. The only way to know that is to read it, unfortunately. They are often 200 pages long and very, very dry legal language. So if you use an agent, I would trust them to advise you on what is and isn't covered. But at the end of the day, do your due diligence, read your policy, at the very least skim it, specifically the exclusion section. There are some other types of insurance policies. The rental market is very weird because there are a variety of insurance products that tweak something that's maybe not meant for a rental policy to fit a rental policy. One of those is a standard HO3 form. So a standard HO3 form is a homeowner's policy. Typically, it is reserved for owner-occupied dwellings. This is what you have on your property that you live in, your primary residence. Some carriers choose to write a rental or landlord policy on a regular homeowner's and just endorse it with an endorsement that extends coverage to rental operations. It's not necessarily the best way to go. It's usually more limiting. The dwelling fire that we use is much more customizable for us. It's not as industry standard, which allows us to broaden our coverages and offer things that maybe you can't offer on a typical homeowner's insurance policy. Another way you can insure your rental is through a commercial policy, because at the end of the day, the rental exposure does constitute a business operation. And therefore, some carriers like to insure your property on a commercial-based form. That's not what we do. I don't know of many carriers that are doing that right now because it typically leads to higher premiums and you're going to be less competitive in the market space. So dwelling fire is what we chose to keep premiums down and to allow for greatest flexibility. So again, your policy may look very different than what we're offering, but it doesn't mean you're necessarily not covered. Let's talk about liability, right? So this is probably the most infrequent claim you're going to get, but it's also the one that's going to potentially land you in court. It's also the one that's potentially going to land you with the highest payout. There are several different types of liability claims and coverage, and you may or may not have one or all of these on your policy. But it's important to know the difference. Premises liability pertains only to incidents that happen on the premises that you are insuring. So whatever address is listed on the insurance contract, that is the only place that premises liability insurance will kick in. Now this usually corresponds with an accident, right? Somebody slipped and fell on your property. Maybe you forgot to put down salt on an icy walkway. They slip and fall. That's going to invoke your premises liability. Maybe something falls and hits somebody in the head while they're on the premises. That can also invoke your premises liability. Typically, it's an accident. Personal liability, on the other hand, protects you from actions by you. So if you do something to somebody, maybe you accidentally throw a ball and hit them in the head. Maybe maybe you're more malicious. Maybe you trip them. This is where your personal liability is going to kick in. Again, this is not on every policy. So again, I would caution you to check your policy to see if you only have premises or personal. Check with your agent. If you use an agent, maybe you can get personal liability. I don't think anybody in here is a malicious actor, but it's always nice to know what kind of coverage you have. Personal injury liability is one that we're seeing more claims in the market because of social media. Personal injury liability protects you from intentionally malicious acts. So if you have a terrible tenant and you go online and maybe you post on Facebook about this terrible tenant that you had and they sue you for defamation, this is where personal injury liability is going to kick in. If you do not have personal injury liability on your policy, intentional acts like libel, defamation, false arrest are not going to be covered by your policy. General liability is typically included on commercial-based policies, and it is a combination of all of these. So for commercial lines, typically they provide one single limit, usually $1 million, and that's going to cover you for all types of liability exposures, all three of these. Again, there's not too many carriers out there writing short-term rental policies on a commercial lines form, but if you do have a general liability limit shown on your policy, you're pretty much covered for all three of these. So it's, again, check your policy to make sure which coverages you do have. Off-premises liability is something that is growing in the market with regards to short-term rentals. So how many people here have stayed at an Airbnb or own an Airbnb that provides kayaks or bikes or scooters or something to use off premises? Typically, if a guest of yours gets harmed on a bike away from the property, your policy is not going to cover that. So if somebody, maybe you had a hole in a tire on a bike, they get a flat tire, they crash, they get all banged up, they try to sue you, your policy is not going to offer you any kind of protection. Okay? So this is why the industry is moving towards, at least some carriers, an off-premises liability endorsement. So this is an optional endorsement that you can add to your policy. I'm not sure who in the marketplace actually provides this except for Steadily. We do provide an off-premises liability option. And what this does is endorses your policy so that if your guests get harmed off premises by something you provide them as a host, your full liability limits will be available to you in the event that they try to seek action. Types of water damage. As I mentioned before, water damage is the single greatest attritional loss leader for insurance providers. There's several different kinds. There's accidental water. This is somebody left the bathtub on too long and it overflowed. There is long-term water. You got a leak in your roof. Water's getting between the walls, potentially lead to mold and mildew buildup. You got flood coverage, which is typically excluded by almost every standard policy. You usually have to purchase that separately. If you have a property in a floodplain, I do myself, make sure that you talk to somebody about flood insurance because that is going to be excluded from your policy. Storm surge, very much lumped in with flood in terms of being excluded. You're not going to get coverage for this. This is flooding or lake overflow due to increase in rain in a short amount of time. And then probably the biggest one, which almost every carrier offers, the thing that you're most likely to encounter is water and sewer backup. Most carriers offer a $5,000 or $10,000 in coverage for water sewer backup. Most of them include it for free. Sometimes you have to purchase it extra. But I would caution everybody to check their water sewer backup limits, especially when you have a short-term rental. People aren't always kind about using the toilet like they would if it were their own home, for instance, flushing things that shouldn't be flushed, right? You're definitely going to want some additional coverage just to be safe in your policy in the event that this happens.
Is that look different with a septic tank?
Septic would be included in standard water sewer backup coverage. It doesn't really matter if you're on a septic or traditional sewer lines. It's the coverage is going to be invoked either way. Business income. This is another huge one that is growing in the industry because rents are on the rise. Short-term rentals also are usually increasing in price as inflationary pressure also reaches properties. What this does is it reimburses lost income due to a covered loss. This is very important to understand. It is only due to a covered loss, right? So just because you weren't able to rent out your property because of, maybe there was some construction on your street or maybe, COVID came back, you're not going to be able to file a loss of income or loss of rents claim. The things that would invoke a loss of rents claim would be the things that are covered under policy: fire, wind, hail, any damage to your structure that makes it unable to rent. That's where you're going to be able to file your loss of rents claim. Some policies allow for up to 3 months, some allow for 6, some allow up to a full year of rents available to you in the event that you cannot rent out your property. Again, this amount is constantly increasing. Another thing to be cognizant of is that there is a direct and indirect cause of loss with regard to loss of rents. Let's say you own a condo in a condo building. Maybe it's on the 3rd floor. There's a big water damage leak to another unit on the 4th floor. And they have to shut down all the floors in order to repair the leak. You can't rent out your property. Can you file a claim? No, because you had no damage to your unit, right? The only way to invoke loss of rents is direct damage to your property, unless you purchase the indirect endorsement. Some companies offer this automatically, some you have to pay extra for, but an indirect cause of loss for loss of income would allow you to make a claim if something happened outside of your property that prevented you from renting it. Loss assessment. Does anybody here own condos that are part of a condo association? So this is a huge one, right? As claims increase in price due to inflationary pressures, due to the cost to rebuild, loss assessment coverage is becoming a greater and greater issue with property owners. The reason why is because associations are sometimes requiring unit owners to carry higher limits. What is a loss assessment? So in the event that damage occurs to community property, sometimes a condo association or a homeowners association will split that cost amongst all of the unit owners to help cover the cost of loss or cost to rebuild. In the event that you get hit with a loss assessment, your policy will not respond unless you have loss assessment coverage. So that's another thing to check on your policy or talk to your agent about, specifically if you are part of a homeowners association of any kind. Loss assessment amounts continue to rise. The requirements by HOAs continue to rise. So carriers are starting to offer higher and higher limits. Steadily currently goes up to $20,000 in loss assessment coverage. We are seeing our agents beg us for $50,000 and $100,000 limits because some condo associations for higher value condos are requiring higher and higher limits for the unit owners. Smart device monitoring. So this is another emerging technology in the rental space. Basically, these devices communicate with outside systems to provide additional information or loss prevention in some cases. One of them are water or leak sensing technologies. So there's two different kinds. There's the water sensing or leak sensing ones, which you can place anywhere water flows, so like under a sink, behind a toilet. If any moisture gets in there, this will ping you and let you know that, hey, we've got a potential water situation on your hands. Stopping water as soon as possible is the greatest deterrent to higher value claims. So notifying you as soon as moisture is detected can help you prevent a larger claim payout. The second kind of water monitoring actually invokes automatic water shutoff. So these devices you hook on the main water line to the home. When moisture is detected or drop in pressure on the water line, it automatically shuts off the water to prevent any kind of leak or any additional water damage within the property. These are typically expensive for upfront installation and purchasing costs. However, almost all the carriers that operate in the rental market will give you a significant discount on your insurance if you tell them that you have these. Some carriers, when I worked for Hippo, we actually provided the customer with these. They had to opt into them, and if you turned it on and we received confirmation that you turned it on, you would actually get a discount. I don't believe they're doing that anymore because nobody ever turned them on. But it is a great way to help prevent loss. Fire, smoke detection, same thing. There's new devices out there that can detect differences in atmospheric pressures that could contribute to a fire. Smoke detection that automatically triggers fire department response. All of these things, again, they cost money up front, but they can save you damages and insurance premiums hugely in the future. Theft and burglary, everybody's kind of familiar with automatic theft and burglary monitoring and how that can trigger police responses as well. Again, most carriers, if you do utilize these, tell your agent, tell your carrier that you have these protective devices. You'll typically get a discount. Things that insurance policies don't cover. So your tenant's belongings. If you have a tenant and somebody breaks in and steals only their stuff, there's probably no coverage for them in your policy. This is, again, why you would require all renters to carry it. Normal wear and tear is not covered by an insurance policy. If a tenant intentionally damages your belongings, that is typically not covered. Unless you're with Steadily, in which case we do offer additional protection for short-term rentals. If anybody damages your property, a limited amount of your property limit is available to replace that. Infectious disease, terrorism, and war. With COVID came infectious disease exclusions. So almost every single policy now contains something called a communicable disease exclusion. If your property results or causes somebody else to contract a communicable disease, they sue you for it, there's not going to be any coverage in your policy. And since the pandemic, you're probably not going to find any carrier that's going to allow you to purchase that back on an additional premium basis. Unfortunately, the insurance landscape has been forever changed by the pandemic, as most industries have. Earthquake is almost never included in a policy. This you usually have to purchase separate. So again, talk to your agent if you live in an earthquake zone or near fault. Flood, same thing. If you live in a floodplain, you're probably going to have to purchase your flood insurance elsewhere. How much does insurance cost? These figures are specifically for landlord insurance, but a typical landlord policy is going to be about $1,070 a month, or a year, sorry. Well, unless you live in Florida, in which case it's a month. And then the average cost of short-term rental typically includes a surcharge, and that would be around $1,300 to $1,400 a month. In speaking to this group, do these figures seem reasonable to anybody?
They seem pretty low.
They are low. This is because this is largely based off of Steadily policy premium. So we do, because we specifically specialize in landlord insurance so much, we have dialed in our rating factors to account for risk associated with rental properties. And this has allowed us to charge a lower premium because we identify factors that will keep our exposure low in the event of a claim payout. So if these numbers look good to you, I would tell your agent to give Steadily a chance and try to quote us as well. And as I'll mention later, you can actually do it yourself. We do have a platform that allows people to quote their own properties without an agent. And we offer a full team of internal agents that can help you through the quoting process if you have any questions. And then you get a slight discount because we don't have to pay commissions to an agent. So it's a win-win for everybody there.
That's per year.
Annual, I would like to reiterate, annual pay, yes. Deductibles. Please check your policy deductible. One thing, again, that's changing the insurance industry is we're seeing higher deductibles across the board, right? Some carriers in most areas prone to wind or hail are requiring a 1% wind-hail deductible. So what does that mean? Well, you probably have a $1,000, $2,500, or $5,000 standard deductible on your policy. This is going to kick in if you have a water damage payout, if you have a fire, if you have a theft or burglary. But if you have a wind-hail event, there's going to be a separate deductible. This can be as much as 1, 2, 3, 5, 10% of your property limit. So on a $400,000 unit, you could potentially see a $40,000 deductible in the event of a wind-hail claim. So do check your policy, see if you have a separate wind-hail deductible. Very important to be aware of. Airbnb and VRBO do offer insurance for landlords who use their platform to rent out their property. There are some limitations. Airbnb and VRBO's policies are meant to be in conjunction with a standard landlord policy. So you're probably going to have some major gaps in your coverage. You're probably going to have no coverage if your property is not occupied by a tenant, because the only time that Airbnb coverage kicks in is when somebody's staying there. So you definitely need a standard landlord policy outside of your air cover or outside of your VRBO insurance. And most of the time, some people, I'm not going to say this group, they seem to be more experienced, but some first-time short-term rental owners think that the air cover Airbnb insurance is going to be all they need. Definitely not the case. This is why. There are many things that are not going to be covered by your Airbnb policy. 1, damage from mold or fungi, not covered by your Airbnb. Neither is standard wear and tear. That's kind of a misnomer because it's not included by a standard policy either. Any damage that guests cause to the property after their booking period has expired, not going to be covered. Loss of inventory during stock taking, identity fraud, identity theft, damages resulting from terrorism, losses from hazardous chemicals or bacteria, loss to personal items like money and precious metal, bed bug, and the big one is host liquor liability. How many people have stayed at an Airbnb that provided a bottle of wine to their guests? Complimentary, right? If an incident occurs around that bottle of wine, you have no coverage. So, for instance, in the laws of liquor liability, somebody who has 10 shots of vodka and then cracks open your bottle of wine and gets hurt, as the host providing that liquor, you have served somebody who should have been cut off. You are at risk to be sued. You are at risk for legal prosecution. Nothing in your Airbnb policy is going to cover you, and probably nothing in your standard policy is going to cover you. Steadily does not offer host liquor. There are very few carriers that do. If I don't want to tell everybody here not to offer complimentary wine and beer with their Airbnbs, because personally I love complimentary wine and beer when I stay at an Airbnb. But this is something to be very, very careful about. If your carrier offers a host liquor liability endorsement, I would strongly recommend you purchase that if you're offering complimentary alcoholic beverages. This is going to shield you in the event that anything happens with regard to the liquor that you are providing. These are some of our specific coverages for short-term rentals. So we do offer liability. All of the liability coverages that I mentioned are available to you. Standard dwelling coverage, property. So this will cover you from fire, wind, hail, all the things that we discussed. Not earthquake or flood. Vandalism or malicious mischief. We are one of the few carriers that are offering bed bug reimbursement right now. So if you have any fears, short-term rentals are prone to a lot of different tenants over a short period of time. Bed bugs are more common. So this will actually provide you with coverage to remediate that. Not only that, while the property is being remediated, you'll also get that loss of rents coverage that will kick in. So, we will provide you with any lost income that you missed out on because of the bed bugs. The short-term rental endorsement that we offer does extend coverage to any damage caused by guests that you host. We do offer that off-premise liability that I was talking about. Not a lot of other carriers offer that right now. And then we do offer loss of income and rents. Some things on the horizon for us. Proper and Honeycomb both offer a squatters and eviction coverage, which is becoming a huge deal, particularly in California. What this does is it provides you up to $10,000 to reimburse you for legal expenses to get a squatter out. It also can be applied towards loss of income that you missed out on because you were unable to rent your property due to a squatter. There's, like I said, the only two carriers that I know that are doing it right now are Proper and Honeycomb. Currently, right now, we are building version 3 of our product. When we roll this out to the public, it will include a squatters and eviction coverage endorsement. So we will be offering that. Definitely encourage people to check that out. Another thing that we are innovating on that I don't think anybody else is doing is HOA and condo association fines coverage. If a tenant does something on your property that causes you to be charged a fine by the homeowners or condo association, we're going to pick that up for you. We're going to offer this coverage free of charge, and there'll be a sublimit, maybe $1,000 annual max limit that we'll pay out. But if you have a bad tenant that keeps leaving the garbage can in the wrong place and you're getting fines from your HOA, we're going to take care of that for you. So this is another just service that we're offering. And then, a pro tip over there, to help mitigate risk in between tenants, we do recommend that you use a property manager. Most carriers will offer a discount on your policy if you tell them that you have a property manager. Also, make sure your property manager is listed as an additional insured on your policy. Almost all of them will require it, but it is typically your job or your agent's job to request from the carrier that they be listed. And again, it almost always results in a discount. What kind of insurance do you need for a midterm rental? In the insurance industry, we don't really refer to anything as a midterm rental. It's typically long-term, which is a year. Some carriers will consider a 6-month rental to be a long-term or midterm or a short-term, but almost always they're divided into short-term or long-term. So less than 6 months can be a short-term rental. More than 6 months is going to be a long-term rental. The coverages that are available to you depend on the carrier based on the length of time. But again, I would caution you to be honest and upfront with your agent. If you're truly renting out your property on a month-to-month basis, if you're not requiring a minimum of a 6-month lease, please go out and make sure you got all the short-term rental endorsements on your policy, because shorter leases may be excluded from coverage in your policy. Again, I know it's really painful to read through these things, but you really should. So let's talk about Steadily and how we operate. So we offer fast and affordable insurance. What we do is we thrive on efficiency, right? We are very, very quick to quote. And the reason why is that we don't ask questions, or we try not to anyway. We try to pull in data sources so that you have very little to fill out and very little information to provide us in order to get an accurate quote. You can use an agent. We are available to most indie agents. We are also on a lot of wholesale platforms. But you can also quote it yourself. And if you have any questions, typically a steadily insurance agent internal will contact you very rapidly. In fact, sometimes when I'm building out new features for a product and I try to test them, I will get contacted within 30 seconds of starting a quote by a steadily employee. And I'll have to tell them, hey, I'm just working on some tests here. Please don't try to sell me insurance. But we do offer our internal expertise for you if you're a little unsure or have questions about maybe what product is right for you or what coverages you might need. So the quotes are always free. You can do them yourself. You can do them on phone. You can do them on a laptop. Pretty much any way you can think of, you can access us. You can even email us your property location, and we can email you back a quote. You can text us via SMS. Sometimes our internal agents will respond within, again, 30 seconds. They're very, very quick, very, very hungry. They like to sell. They get rewarded when they sell. So they're very eager to help. Types of properties we're currently covering. So we do single-family homes. That's our bread and butter, right? That's what our largest aspect of our portfolio is. We do condo units. We do manufactured homes. We do apartment buildings. We do multi-family homes, duplexes, triplexes, quadplexes. We typically don't go higher than that, so a big apartment building isn't something that we're going to be the proper carrier for. And then we do some vacant and restoration. So let's talk about that. I've heard some people in here mention flips or renovate and flip properties. Just a couple of weeks ago, we dropped our first non-rental product. So everything that you purchase from Steadily requires a rental exposure. So if you own a home, maybe you only rent it out one weekend. Maybe you own an Austin property, it's your primary residence, but when ACL is in town, you want to get the hell out of here and rent that out. That's all you need to be able to purchase a Steadily policy. Any kind of rental exposure, right? If it's just your primary residence, you never rent it out, we're not the carrier for you. But our first non-rental policy is a fix and flip. This is something we've been developing for the last few months. We just put it out in the market. So if you have a property that you're purchasing and renovating with the intention of selling it, you can come to us. We'll happily provide you a quote. There are some limitations. For instance, no construction on exterior walls. So that would be more appropriate for a builder's risk type of policy. We only do kind of internal or interior renovation, and then we do allow for a roof replacement if the roof needs repaired. But that's about the extent of the renovation work that we'll cover. If you're going to renovate a property and then rent it out, we also insure that. We're also a market for that, so please come check us out. And then lastly, something that is gaining popularity in the market is an ADU. Is anybody familiar with that? It's called an accessory dwelling unit. So I heard you mention building multiple tiny homes on a property. Yeah, so that's what we're talking about. You know, Austin, we're seeing these pop up everywhere. Because of the zoning restrictions in Austin, in order to provide more housing, what a lot of people are doing is tearing down one home on a lot and building 3 or 4 smaller properties on that same lot. A lot of carriers are going to exclude this or not be willing to provide coverage. Steadily has drafted a product that will allow you to insure accessory dwelling units on a property. Same goes for if you have a primary residence and then a tiny home in your backyard that you rent out. We're also able to insure that as well. Again, a lot of other carriers are going to consider that tiny home to be part of a main property structure. No rental exposure because it's part of your primary domicile. Maybe not willing to provide coverage. We'll provide landlord coverage for those tiny houses or guest houses in the back that are rented out as well. We do have excellent ratings online, mainly due to the fact that our customer service team is excellent. And I do mean that. They're not just trying to sell you policies. They really, really do make an effort, and they're very, very responsive. Like I said, if you start a quote on our platform right now, I bet you before you can even get a price, somebody is texting you to reach out to help and answer any of your questions. We have a brand ambassador program. So if you're a type of property investor that likes to post on Instagram, maybe you're an influencer, maybe you have a large social media presence, we actually will reimburse you or provide compensation for repping the brand online. So if you're interested in that, please contact steadily.com brand ambassadors page, and there'll be a contact form to fill out, and we can get you set up, offer you discounts on insurance, also provide you direct compensation. A lot of perks that go with that. If you want to get a quote, all you need to do is go to steadily.com. If you're more comfortable using an agent, tell your agent to go to steadily.com. But on the steadily.com webpage, there'll be a single bar to enter an address. You enter the address, you verify a couple data points that we pull in, you'll have a quote in less than 2 minutes. And then I'm going to open it up to questions if anybody has any.
For like ADUs, does that also include like the more out of the box type of places like container homes, tree houses, earth ships?
Tree houses, I would say we're probably not a market for. And anything that's on the ground, yes. So we do have a variety of, we have a large appetite for any type of rental exposure. Now, on the back end, we do have underwriters that review every single risk. What we try to do is minimize any friction between you and us, right? So if you're quoting something that we're not a market for, we're going to try to tell you upfront right away. Steadily also is an MGA. That's a managing general agent. So yes, we have our own insurance products that we offer you, but if you go quote on our platform and we can't provide you coverage, we'll place your coverage elsewhere for you. So our goal is anybody who has a rental property, if they come to us, we will find you a policy. It may not be with us, but we will find you one. So those treehouse risks, I don't know where our direct agents would go to place that business right now, but we would try our best to do so. Anything that's on the ground, yes, we'll probably take it. Our underwriters will review it. If it's a super weird construction, they might have questions. They might ask for additional information. But generally speaking, we'll do our best to provide you a quote.
By something on the ground, do you mean like physically foundation-wise, or what about like an airstream or a tiny house?
So right now we're not doing mobile homes. We will in the future. That's something that we're looking at. Manufactured homes we do. If you can provide reasonable evidence that that thing is cemented, or even if it has wheels, is permanently located there, we could probably make an exception, right? But if it's something that's going to be moved around, we're not really in market for that yet. As we continue to grow and scale, that will be something that we implement.
For the record, it took 6 years to find somebody to insure.
I can promise you now, with
Air cover the whole way, which I do not recommend. It will not work out for you all the time.
the good news about insurance for tiny homes is as tiny homes grow in popularity, there are more carriers picking those up nowadays. We do them to an extent. Again, it depends on the size, location, a lot of other factors. Typically, they're often in remote places or large swaths of property. That's not necessarily restrictive, but sometimes those return high wildfire scores because of the brush and forestry around them. So there are some limitations based on our other guidelines, but again, we will find you a market for that if you come to us. Any other questions? Any non-landlord insurance questions?
I got one. What about animals on properties? Like, I'm launching one with a couple longhorns, goats, and sheep. What would that look like from a liability standpoint?
Well, I don't want to say it's excluded, but you will get attached. We have developed something called specifically for these. Well, actually, it was originally implemented to protect us against vicious dog bites. So that was something that was kind of like happening a lot in the market. A lot of carriers, if you tell them you have pets on the premises, specifically dogs, they're going to ask you what breeds, and they'll often have a list of breeds that are not allowed. What we do is, in the event that there's animals on property that provide a risk to either us or to a tenant, we have what's called an animal liability exclusion. So are we going to provide you coverage for a longhorn that attacks a tenant? No. But will we write your property? Yes. Just because there's longhorns or sheep or goats or whatever, we're not gonna say we can't provide you coverage, which a lot of other carriers will. But we will attach this animal liability exclusion, which will relinquish us from any obligations to provide coverage in the event that your animal property harms another person.
One more. What about claims? Do you have any data on how many claims are accepted through steadily versus denied?
So this is hard to answer. There's two reasons why. One, we are a fairly new company. We wrote our first policy in 2020, right? So while we do have claims data, 4 years is not a long enough time for an insurance carrier to consider their claims data accurate or indicative of future performance. Typically, you want 5 to 10 years worth of data minimum. And then the second would be, prior to just this year, Steadily did not manage their own claims. So we use what's called a TPA, that's a third-party administrator. You actually file a claim with Steadily, we hand it off to another company, and they interact with you. This is what a lot of startups do because managing your own claims is very expensive. But it also, you relinquish control over the claims experience. And what we didn't want to happen is people say, I don't like Steadily because they were terrible handling my claim. That's why we decided this year to bring in claims internally. So now we are hosting our own claims, collecting our own claims data. I will say we are very good about paying claims. We will almost always pay the claim first, ask questions second. The goal of any insurance company at the end of the day is to pay insurance claims. Okay, we would not exist if it weren't to pay our claims. Now, I know everybody has a misconception about insurance industries. I know that the larger guys out there, you know, the State Farms, the Liberties, the Progressives, the Geicos, the big, huge guys, they can save, you know, millions, sometimes billions a year in mitigating claims payouts. There's a famous saying in the insurance industry with regards to claims, and that is the three-pronged approach. The first one is to delay. So you file a claim, we don't really want to pay it. We're going to delay and draw out the process and be very slow to respond to you. If that doesn't work, then you go to the second approach, deny, right? Deny the claim outright. If that doesn't work, you go to the third, defend. Take you to court and we'll defend ourselves against your ability to pay the claim. That is not how Steadily operates at all, right? Our goal is to be there for the insured, to be very responsive, to make sure that the insured gets what they pay for at the end of the day, which is a promise by us to pay the claim. So we have a pretty high payout for claims ratio-wise, and typically most people have given us very favorable reviews on our claims handling experience. But this is new for us because it's only been going on. We've only been handling them internally for about 3 to 4 months right now. But we did hire a fantastic claims guy. He was head of claims at Geico before. We told him forget everything you knew over there and come over to us and help us build out our claims handling procedures. So, all right, last chance for questions. All right, thank you guys so much for listening to me rant about insurance. I know it's everybody's favorite topic, but something that's really important, especially in this space and with people who own multiple properties. So, again, you can find me on LinkedIn. If you guys have any questions at all in the future or just want some guidance on maybe where to go or what to do, I'm available as a resource anytime. So.
Cool. Round of applause. Wow. Thanks so much.